You've been lied to, not by some online guru, by Wall Street. Every day you hear the same investing advice, packaged as wisdom, repeated by talking heads who profit when you follow it. But peel back the curtain and the data tells a very different story. In the next 10 minutes, I'm going to expose the three biggest investing lies Wall Street sells you, and more importantly, show you what actually works. No jargon, no cameras, just clarity. Welcome to Capital Clear. Lie number one, you need to beat the market. This is Wall Street's favorite sales pitch. They tell you our fund can outperform, our analyst has the hot picks, pay us a fee and we'll get you alpha. But here's the truth they don't want you to see. Over a 15-year period, roughly 90% of actively managed U.S. stock funds fail to beat the S&P 500. 90%. That's not an opinion. That's SPIVA data, Standard & Poor's own scorecard. And it gets worse. The few funds that do beat the market in 1 year almost never repeat it. It's luck, not skill. Yet Wall Street charges you massive fees for that luck. So what's the alternative? Accept the market's average return, which historically is around 10% annually. If you'd invested just $10,000 in a low-cost S&P 500 index fund 30 years ago and never touched it, you'd have over $170,000 today. No genius picks, no daily checkups, just the market doing its work. The real investing secret isn't beating the market, it's letting the market beat for you, compounded over time. Wall Street doesn't charge fees for that, so they keep you chasing something you don't need. Lie number two, cash is safe. Your parents probably told you this. Financial advisors who sell annuities love this one. Keep your money in savings, don't risk it. Cash is king, but cash is not safe. Cash is a guaranteed loser, slowly destroyed by a silent tax called inflation. Let's look at real numbers. In 2020, the US dollar lost about 1.2% in purchasing power. Fine, but in 2022, over 8% inflation. That means every $10,000 you left sitting in a savings account, earning 0.5% lost over $800 in real value in a single year. You didn't see the number drop, you just couldn't buy as much. Wall Street knows this. They don't keep their own money in cash. They own assets, stocks, real estate, bonds, commodities that historically outpace inflation. Even the risk-free option over long periods has been Treasury inflation-protected securities, not plain cash. So if you're sitting on a large cash pile right now because it feels safe, you're actually accepting a guaranteed loss. The real risk isn't market volatility, it's your money slowly evaporating. Lie number three, this time it's different. 4 words that have cost investors more money than any market crash combined. Every cycle, a story emerges. .com bubble. The internet changes everything. Valuations don't matter. 2008 housing crisis. Real estate never goes down nationally. 2021 meme stock mania. It's a new form of community investing. And today? Maybe it's AI stocks, maybe it's crypto, maybe it's something else. The pattern is identical. Prices get detached from fundamentals. Smart voices whisper, maybe this time the old rules don't apply, and then gravity returns. Always. Here's what's never different: human emotion, fear and greed, overconfidence during rallies, panic during sell-offs. Wall Street exploits this. They sell you on the new thing because they make money on the hype. When it crashes, they've already moved on. The intelligent investor knows that this time is never different. The cycle repeats. So instead of chasing what's hot, you build a boring, diversified portfolio that survives all seasons. You buy when there's blood in the streets, not when everyone is euphoric. It's not exciting, but it works. Every single time. So you've heard the 3 lies. Beat the market, cash is safe. This time is different. What do you do instead? 3 simple steps. 1. Own the entire market, not individual bets. A low-cost global index fund or ETF. You're not gambling on a single story. You're betting on human innovation itself, which has risen for centuries. 2. Let time do the heavy lifting. Not timing the market, but time in the market. Even if you invested only at the very peak before every major crash, if you held on for 20 years, you still made money. Compounding is a patient machine. 3. Add consistently, especially when headlines are terrifying. Automate it, same amount every month, regardless of what the market did that day. This is dollar cost averaging. It removes emotion completely. This isn't Wall Street strategy because it doesn't generate commissions, but it's the strategy of actual millionaires. Quiet, boring, disciplined. 3 lies exposed, a simple truth revealed. If this video gave you a new perspective, hit subscribe and turn on notifications. Capital Clear is VoxSilo channel, built on artificial intelligence and timeless financial logic. No cameras, no gimmicks, just clarity. Next up, we're asking an AI to build a $10,000 portfolio, and the results might shock you. See you there.